Well, hello, and thank you again for showing up for another edition of Running a Holistic Office. So great to see you all here. As we're waiting for a few more people to come in. I thought I would just take a minute, introduce myself. I'm Kristen Ford. I'm the creator of Holistic Office, an electronic health record management system designed for independent practitioners to spend a lot less time on administrative work and more time on patient care. So thank you for tuning in for Running a Holistic Office. I created this show to share with you the tips and tricks I've learned over the years to not only get the most out of your EHR, but also to create a streamlined practice that your employees enjoy coming to work to every day and where your patients feel special and well cared for. So we cover lots of topics, anywhere from cybersecurity to some cool apps to help streamline your operations. And we also spend a lot of time on financials, which brings us really to our topic for today. It's about that middle of the month time, and it's time to review our financials, but because it's January, we're going to work on the end of year financial review. And really it's a financial close. And so for you non-accountants out there, every month when we talk about reviewing these books, it's actually part of what we call a close process. And that's where we review the financials, we make sure everything is accurate, and then we close the books. And quotations, you can see close the books. And this means we can keep moving forward. We're compliant with GAAP, and we just kind of know what's going on. And at the end of the year, as we get ready for the tax season, we close the books for the whole year. And that's what we're going to talk about today, because right about now you are knee deep in it. And for those of you who maybe aren't as comfortable dealing with this, or really are kind of the people who just kind of shove it over to the tax accountant and let them deal with it, this show may be helpful for you, because I actually have a tool that you can use to help muddle through this. So let's start with a review. As we mentioned way back in November when we started our monthly review of the financials, there's just a basic set of reports, really, as you as a business owner, you need to review every single month. And that includes a profit and loss statement, which we dove into a little bit more in December. Our actuals to budget, which is really that profit and loss statement compared with your budget, so that as you go along the year, you can keep track of how you're doing and making your goals and everything. There's also the balance sheet, which we're going to talk about next month. I know you can't wait. And then, of course, we should be reviewing our accounts receivable, our accounts payable, and also a cash flow statement. I think we all know some of you cash, businesses, you don't worry about it as much. But for some of you who have a lapse as you're collecting money from insurance companies and everything, it could take a little while to get that. So we got to make sure we review the cash flow as well. So each one of these reports, they have their own KPIs, and those are, key performance indicators and metrics that can help you determine the health of your practice. It also helps you identify areas that you might want to improve on in your practice. And so at the end of the year, these reports are going to take a little bit longer to compile, because we want to take some time and make sure that we really have everything together for tax season, okay, and that your books are as accurate as possible. So many of you work with in-house bookkeepers, accountants, or your CPA to prepare your books. As I mentioned before, others of you are just going to send everything over to the tax preparer and you're just going to forget about it. But I'm going to encourage you this year to take a little bit of time, and I know time is precious for everyone, but take some time and really try to understand your year and prepare your financials thoughtfully so that you can achieve your personal goals and maybe help you set goals for this year that really will help you grow your practice. So, what kind of goals? Tax reduction, right? When we account for our expenses properly, it can help reduce our tax burden. And sometimes, I see people preparing books and they're leaving invoices off because they're like, oh, well, we're going to pay that next year. Well, but you accrued the expense this year, so you might as well get the tax break, and helps you, reduce your tax burden. Also, your sales goals. When your books are really telling the financial story that you want it to tell, you're going to see how well you're doing with your sales. Your sales are your services, they're the supplements that you're selling, right? And your book should be able to tell you, are you really getting the ideal patients? Did you get enough ideal patients? Are you attracting the clients you want to serve? And what about the products that you're selling? How are your proprietary and white label supplements selling? What about your face creams? Sometimes, we sell these things and we think we know what's going on with them, but until you see it in black and white, we don't really know what's doing great and where we need, to actually, have some improvement. So the last goal, and this one's not as common, but I want you all to think about this because I see this a lot. I was brought into a lot of companies that they were ready to sell, or they wanted to bring on a new partner, and we had to come in and clean up the books. And let me tell you something, it was a heartache. It was a heartache for everybody. So if you are preparing to sell your practice, start looking at this now. It's not as common, but really to attract the best price, having organized financials that are accurate and show your growth over a 3 to 5 year period, because people will want to look back that far to see really what this practice is all about. Having your books together and understanding what's been going on in your practice and being able to tell that story through your financial reports is going to be paramount in attracting the right buyer and getting you the best price for the practice that you have spent all this time and energy into building. Okay, so hopefully I've convinced you on why this is something that you need to do. We're going to get started. So, as I mentioned briefly, we close the books on a monthly basis and then on an annual basis. And so, we're going to talk a little bit about this annual basis because it's January and most of you have a calendar year that is the same as your fiscal year when you close your books and do your taxes. So I thought this would be a good time to kind of talk about this. So I'm going to move this to a full screen. I created let me see if I created for you all a month and year-end close checklist. And we're going to just talk about the year-end checklist here. And we're going to go over a few things that you should really think about. And for all of you, I'm going to make this available as a download for you to use and share with your finance team or your in-house bookkeeping team. And it's just a checklist to make sure that you are remembering all the parts of your practice and we are accounting for them properly. And this will help your tax season go a little bit better too. So I like to organize everything really by, revenue and expenses, and then assets and liabilities. And then I get into some taxes, and then we can finalize your books and have some suggestions and best practices here at the end. So I'm just going to kind of go over some of these and give you an idea of what we're talking about here. So up here in this revenue, category, I always like to start with the revenue because it's revenue expenses, that's your operating, right? So the quicker we can get all of this information correct, the rest of it's going to be a lot easier, and you're going to kind of breeze through it a little bit faster. So when we start with revenue, if you've listened to any of these little shows that we've got going on here, I always want you to reconcile your sales with your EHR. So for you all who are on a cash basis, this is going to be a little bit more tricky for you. And this is why I really want you to be on an accrual basis so that you always know, what's going on here. Because, as we talked about many moons ago, when you have a cash basis with sales, if you don't get your money until a couple of days or a week or a month after you actually made the sale, then when you try to reconcile all this with your EHR, it's just not going to match up. Okay. And so when you're on accrual accounting, this makes this a lot easier to do. So we're going to have another segment where we really talk about this and some of the best practices for you to do this easily every month so it's consistent and you're not scrambling at the end of the year, because some of you are going to be scrambling and you're not going to be happy about it. And I am truly sorry for that. We're going to help straighten that out. So that's the first thing we want to do. We want to reconcile your sales with your EHR. And then what we want to do is we want to review your accounts receivable. So in what we want to do is we want to try to collect anything that's outstanding, determine anything that's not collectible, and then enter in that adjustment, and write it off as just bad debt, right? So something easy to do. And so this is a short list, but it's one that really requires a lot of time because we want to make sure that your revenue is as accurate as possible. Okay. Then we kind of move on to expenses here. And so how you use this. Let's talk about how you use this real quick. So, you come over here and we have a due date, right, section. So we can put this in here. Look at that, 2018. Why don't we make this 1/21/2022, right? And then in here, we want to put some initials. So we'll just say it's me, it's KDF. All right. And then once it's done, all you have to do is literally click on this. All right, you used to be able to click on it. Or you can just copy this and you can just paste it on in there when it's done, right? Yay. All right. So this is what we want to do. And I always have these checklists, and the monthly one is a little bit shorter than this, but it goes out for all 12 months. And I suggest that you use it because it gives you an opportunity. Let's say you have an in-house bookkeeper and you go to review the financials. Before you even review the financials, I would go through the checklist, right? Make sure everything's complete, answer any questions that there are, and then you can get to the financials, which is going to run a lot smoother because you already know, that everything's done on the list. I can't tell you how many meetings I've been in, and people are like, "What is this? And what is this?" And you have to drill down, and it takes everybody's time. And so, just doing this prep work is really going to help out quite a bit, and it's going to help keep your books together. All right, so off my soapbox. All right, so anyways, expenses is our next area we want to take a look at. And so this is, we're going to do kind of a similar thing. We're going to review any open invoices, make sure any invoices that you owe money on are entered in for the correct period so you can expense everything that is expensed. You're going to request any missing invoices. We accrue expenses and sometimes we don't get that invoice until a month later. And that's great, but it's still for the period that you incurred the expense, right? So you want to request any invoices, and then you want to actually accrue that expense if you don't have an invoice. It's better to estimate it and get everything you possibly can expensed in the right period, right? And the other thing you want to do is you're going to want to review any uncashed checks and, adjust it if it's a duplicate. This by itself, I can't tell you how many books I've looked at that just reviewing those uncashed checks, we found all these duplicate entries and it just wasn't correct. And so they were overstating the expenses a little bit, and you don't want to do that either, right? So, and then I separate out payroll. Okay, you guys are all running payroll. And so you want to make sure that your payroll is correct. And what I mean by correct is that all of the periods where you are paying folks are easily found in your books. If you are in a 26-week period, you want to make sure 26 weeks are reflected. I personally am kind of old school a little bit. I like the semi-monthly on the 15th and the 30th or the end of the month, because it's just much easier for accrual accounting, and it's just easier to make sure all of your payrolls are accounted for. And in that case, you'd have 24 payrolls. You want to reconcile those with your 941s and your payroll reports. And you also just want to, review all of your employees, make sure there's no discrepancies, you don't owe them any money, or maybe there's some adjustment that needs to be made. Again, any uncashed paychecks, you have responsibilities for that. Daisy's here visiting us. And make sure we calculate any type of vacation or PTO accrual. So some of this stuff, you're going to be like, whoa, what do you mean? So this would be a great time, if you don't have somebody in-house who is comfortable with this, to get some assistance with your CPA firm, or bring in a part-time accounting manager that can help with the close every month. There's lots of great organizations that supply these fractional services, and when you're organized, they don't have to cost a whole lot of money for you. The other thing too is that if you have a payroll service, some of this stuff, you can also work with your payroll service depending on who they are. But a lot of this is going to have to happen in your own practice. So here's just a checklist to remind you of all the things you need to do on the expense side. So then we're going to move on, and we have our assets. So for some of you, you carry an inventory. This is a great time to do a physical count, and adjust your EHR and your physical count to make sure that it's all accurate, and make any adjustments that you need to make. And then you also want to update any deposit schedule that you might have. And deposits could be a rental deposit, could be any kind of a deposit. It's even like if you have you're working with attorneys and they have a retainer, that's a deposit. So you want to make sure that any deposits you have are still accurate, reconcile it to your balance sheet. And it's the same thing with your prepaid schedules. So a lot of you pay things annually. Insurance premiums are paid annually. And you need to be accruing that throughout the year. So rarely are you going to have something from January to December that fits into your fiscal year. So just make sure that, any balances that are left over and carried into the new year are correct. And the same thing with your fixed assets. You want to go through your asset groups, listen to me, your list of fixed asset schedule. How about that? And add any new assets in there. Make sure it's put in the right depreciation schedule. And again, get help with this. Talk to your CPA about it. Or whoever is your financial guru about that. And then you want to update that depreciation schedule and enter your adjustment for your year-end depreciation. And that's, that adjustment, by the way, and even updating the depreciation schedule, I've seen many tax preparers help with this. So, just knowing what it is, but doing at least that first step, adding any new assets, it's just going to make everybody's time go a little bit faster, and you'll be more prepared to have that discussion when the time comes. Any investments that you have, you want to make sure that those are all reconciled correctly. And here's a big one that I think it's ignored quite a bit. Review any loans that you have outstanding to shareholders and officers, and even employees. Okay, make sure that your balances are correct, and confirm that all of your paperwork is complete, and that also the terms of these agreements are being adhered to. Very often I see, especially loans to shareholders and officers, they don't have a formalized note. If there's any interest, it's not being accrued. Doesn't mean you have to start paying on these things, but you do have to make sure that the note is valid and that the terms are being adhered to. This always bites people in the butt when they want to bring on an investor, or they want to try to sell a company. Okay. And they'll take a look at this and they're just going to be like, I don't know what really is going on here. I don't know if we're going to pay it or not. And just get, and worse if you get audited. Good night, nurse. Anybody who has to be audited, I immediately empathize with you and pray that you get through it without being too much harm to your psyche. But anyways, you want to make sure that this is always correct, and this one is a big one. Um, so then we're going to move on here. We have liabilities. It's a shorter list, but also still very important. We want to take all of those loans and reconcile them to the year-end statements. We also want to go to your merchant processing fees and make sure that those are reconciled for the year as well. And then if you have petty cash, reconcile the petty cash. Okay, it shouldn't take you very long to do those. And then I talk about taxes, right? Because, the end of the year, especially January, brings a whole set of issues for taxes. And a big one for companies that I think they have a harder time with is 1099s, right? So, definitely check with your CPA. Look at what you've sent out 1099s for last year. But, the first thing you want to do is determine who gets one. Okay. And, I'm not a tax expert here. I know a little bit about it, but I think that that's a question that you really need to talk to your internal tax team about. So you want to determine that eligibility and get updated contact information as quickly as you possibly can. And that's usually in the form of a W-9. And that's an IRS tax form that's used for 1099 folks. And then you want to disperse your 1099s. So I'm going to skip down just for a second and talk about some best practices for that. So for dispersing 1099s, there are really great online companies now that will do this for you. You upload that information and they make sure that you are state and federal compliant, and they make sure that it gets delivered. It can be delivered via email, and then also, if necessary, by mail. And honestly, delivering it by email is the way to go. So there's one of your helpful tips on dealing with 1099s. And then you have your filings. Now, depending on whether or not you are the one that is doing a manual payroll and doing all of your state and federal filings, you're going to want to file your fourth quarter 941s, your federal 940 for the year, and also your state wage reports and returns. And then you also have to file a report for Social Security. Or if you are doing what I hope you're doing and working with a payroll company, you just want to confirm with that payroll company that all those reports are filed and make sure that you don't have any obligations on your end. Because being late there's always a penalty. Then you're writing letters, and it's just a time waster, right? And then I think once you do all of these taxes, you should be able to estimate with your tax preparer what your tax liability for either that quarter or for the whole year will be, and you want to enter that into your books as well. Okay, so pretty decent list here, and it's going to take a little bit of time to get through all of this, right? There's a little bit of things here to do. So how do we finalize all of this, right? So what we're going to do is we're going to make sure all of your adjusting entries from your accounting team or your tax preparer are entered. And once everybody agrees that the books are correct, we're going to stick a fork in it, call it done, and we're going to lock your books. So for anybody who uses QuickBooks, you may or may not be aware of, but you do have the ability to set a password to lock your books. And this allows you to make sure that nobody is going into past periods and making adjustments without approval from the accounting team. And this is super important, especially if you have other shareholders and you are giving them monthly financials. Making changes to the books is going to change the financials, and it's just not cool. It just causes problems. You can screw up your tax returns, especially if it's in another year. Just don't want to do that. And then the last thing you want to do is you want to upload that budget for the new fiscal year, right? So we can start off 2022, in February when you're reviewing January, and we already know how we're doing against our budget. And the sooner we do that and get started with it, the better off you're going to be throughout the year. So what a mouthful. All right. So I'm going to close out here that with a couple of suggestions and best practices here. About collecting that employee and key vendor information in December. I know it's January, but hey, you have it for next year. Other things that I think are really helpful is when you have all your schedules and workbooks like prepaids and depreciation and things of that nature, attach all of that stuff to the journal entry so that when you're reviewing these things, the backup documentation is right there. Makes it really, really easy. And all of the accounting software has this now. And you do the same thing with your bills and any checks. Attach all your invoices to those, right? Any information that you have that can make it easier to track down and find out what's going on, the better. I've worked for many, many companies. When they've brought me in, they're like, hey, get started. And I'm looking at stuff that has no documentation, no explanation, and I have no idea what to do with it. It just makes it harder because there's always going to be turnover. So don't let that happen to you. So I am going to make this available to you all for a download. And for any of you that are using Trello, I'm personally a big Trello fan. You can also make this checklist in Trello as well and have it repeat every single month. And you can do this and add this to all of your checklists. So as you're managing your practice, you could be like, hey, here's my social media list. Here is my inventory list. Here is my financial close checklist. And it's great because you can actually monitor that in Trello as well. So big Trello fan, but this is Excel. Everybody can use Excel. And so I hope that you do find this helpful for you. So, like I said, big mouthful this time. So, anyways, I think that we can move on here. And, I do hope you find this useful. And if you have something similar to it, hopefully, obviously you can use this to just make sure it's as complete as you want it to be. And of course, make this work for you in your practice and make sure you share it with your team. So, all right. So you can probably hear maybe some little scratchings in the background and everything. It's because it's time for our chief financial, listen to me, the chief companion officer over here. Although some days I really do feel like she is the chief financial officer. Let's make this a little bit bigger. Yeah, I'll just move me over here. I'll even make me a little bit smaller because we really want to see old Daisy Poo. So, in the last show, I kind of mentioned how Daisy's been a little bit cooped up and everything. And I showed you what a wonderful Christmas that she has. And, we're really blessed here to be here in Southern California. And we take Daisy out right by a nature preserve. And this picture over here on the right, you can see a little bit of it. And really our chief technical officer and our co-founder, Rich, he loves to take Daisy on hikes. And this is actually a picture of Daisy at the top of Mount Bernardo. Certainly not like the Rocky Mountains here, but, a pretty decent hike. And she's having a little bit of water and looking over the vista here. And she's just kind of looking relaxed and happy and enjoying the sunshine. So with that, I thought I would close out today. And I want to thank everybody for tuning in. And if you have not connected with me, however you're watching me, connect with me, right? So love to meet new people. And I'm just so grateful that, you spend time with me every week. And I hope that you like our different rooms and my floating head and all this other cool stuff too. So anyways, I'll stop moving it around. All right. So you guys have another great week. We will be back next week and we're going to have, other great topics and discussions about running a practice. And we'll pay our respects to Dr. Martin Luther King Jr. So a super leader and one that we can all take a moment and show some appreciation for and continue the good fight. All right. So you guys have a great week and we'll see you next Tuesday at noon. Bye, everybody.